Polymarket. You have probably seen this name everywhere lately, and if you are still not sure what it actually is, don't worry, you are not alone. Don't confuse, and not to worry. Your brother Charlie is here to make you understand. So let's break it down in the simplest way possible. Polymarket is what people call a prediction market. That sounds technical, but the idea is actually very simple. Instead of betting on a sports game the old-fashioned way, people on Polymarket trade yes or no contracts on real-world events, things like elections, economic decisions, sports outcomes, and even global news stories. Here is how it actually works. Every question on the platform gets two contracts, a yes side and a no side. These contracts trade between 0 cents and $1. If you believe something is going to happen, you buy the yes contract. If you think it will not happen, you buy the no contract. The price you pay reflects what the crowd thinks the odds are. So if a yes contract is trading at 60 cents, that basically means the market believes there is roughly a 60% chance that event happens. Now here is the exciting part. If the event actually happens, your contract settles at $1 full. If it does not happen, your contract becomes worthless. The gap between what you paid and that payout is your profit. People call this a real-time read on what the crowd is thinking, because actual money backs these opinions, not just guesses. Polymarket runs on blockchain technology. It is built on the Polygon network. Trades settle using a digital dollar called USDC. This digital dollar is designed to stay equal in value to $1. Everything runs through smart contracts. That means no single company sits in the middle holding everyone's money. The system itself handles the matching and the settlement. One thing that makes Polymarket different from a typical betting site is that it works like an exchange. You are not betting against the house. You are trading directly with other users. Prices move based on supply and demand, just like a stock market. If more people start buying yes contracts on a question, the price moves up. If sentiment shifts the other way, the price drops. When an event finishes, the platform relies on published rules and trusted data sources to decide the outcome. Most markets settle within a short window once the result is clear. In rare cases where people disagree on the outcome, there is a dispute and review process before the market finally settles. It is also worth understanding the access side of things. Polymarket has gone through a long regulatory journey, and a regulated American version of the platform is now available. This gives traders in the United States a compliant way to participate using more traditional methods. Outside the US, the original global platform continues to operate using crypto wallets and digital dollars. So why has Polymarket become such a massive talking point? The trading volume has grown incredibly fast. What started as a smaller crypto community product has scaled into billions of dollars in monthly activity, putting it in the same conversation as some of the largest traditional betting markets in the world. People use it to track sentiment around elections, economic policy, and major news events, almost like a live pulse on what the world collectively believes is going to happen next. Of course, like anything involving real money and real risk, it comes with responsibility. Markets can be unpredictable, prices can swing quickly, and outcomes can go against you. Understanding the mechanics is just the first step. Smart decision-making always comes next. That is the real story behind Polymarket explained in plain, simple terms. No confusion, no complicated jargon, just the facts laid out clearly so you can understand exactly what this platform is and how it works. Before signing off, this video is for educational purposes only. Nothing here is financial advice. Crypto trading carries significant risk. Always do your own research before making any investment decisions.